Our next guest is worried more about the jobs market anyway and about the president's big, beautiful bill. And he thinks international markets are the right idea for investors right now. Eric Pachman is chief analytics officer at Bancreek Capital Advisors. Eric, so many people, look at the dollar today, right? They're looking to international stocks and hoping that they're not jumping in right at the moment that this trade is about to turn. So reassure them.
Yeah, so maybe I have some good news for them, I guess. If you look at the job market over the last 2 years, on the surface, the private job ads have looked pretty strong, right? 127,000 jobs per month on average. But when you look at the BLS's data and you start digging down into the details, you don't have to go very far before you actually see that 80,000 of those jobs per month came from healthcare and social assistance. So that's 63% of all job growth over the last 2 years came from this one sector. And for context, only 17% of our workforce is working in healthcare. And so I've been covering healthcare for quite a while now. And what's very concerning is I really haven't seen a setup that is this negative for healthcare job growth. The engines of job growth over the last 30 years were expansion of Medicaid, Medicare, things like that. And potentially almost all of those are at risk within the one big beautiful bill, not to mention the NIH funding cuts and the most favored nation drug pricing reform. All of these things are almost the perfect storm of risk for the healthcare space. And it's very, very hard to see how healthcare jobs keep carrying the entire economy.
That's interesting because most of us are focused on the cyclical nature of the economy. You say cyclically, it's actually looked okay lately, but you're saying a structural underpinning of job growth, which is healthcare, is weakening. So then how does that lead you not only maybe away from healthcare equities, which have also underperformed, but how does that lead you to investing in international markets?
Well, if you have this one big risk that's sitting in this country right now, which frankly, I don't think enough people are talking about, then the best way to do it is to just sidestep that risk. The international risk is highly idiosyncratic. It's really only related to this country. Then you have, to make matters even more interesting, the tariffs are actually helping some of the highest quality non-U.S. companies as it's kind of removing some of the competition that they were facing from their multinational U.S. companies. Plus, you have this additional tailwind with any additional dollar weaknesses. And then on top of that, a huge valuation discount. So it's really like a value play that really is safer in our view. And that's the reason why we're so excited about this in Bancreek and launched last year our international ETF BCIL.